after reporting, like I said, mixed bag of earnings. Vivek Gambhir, who is the MD and CEO of Godrej Consumer Products, says that we expect a gradual recovery in the coming quarters for the FMCG industry and also for their business. Listen in to what else he had to say.
We've been pleased with our volume growth. It's been the strongest volume growth we have seen over the last 5 quarters. And what's encouraging is that the volume growth was very broad-based across all the categories which delivered good volume growth. The situation still remains challenging. It's been more of the same over the last few quarters as far as the industry is concerned. But we've taken lots of actions, particularly increasing our thrust on innovation and also intensifying our distribution efforts, which just seems to be working well for us. And so our efforts will be is to actually improve on this volume growth momentum over the next couple of quarters.
Okay. So any improvement as far as the rural growth is concerned, because according to Nielsen, worst growth in the last 7 years. Have you seen any kind of improvement there, or is it the same situation? Is it growing behind urban now?
We are hoping for a recovery in rural, but our guess is the recovery will start post-January 2020. In terms of our growth, rural grew marginally ahead of urban. It was more or less the same, but we've been used to rural growing at about 1.5 times our urban growth. So in that sense, rural is still a bit of a challenge, particularly in terms of liquidity, and the sentiment levels are quite low. But post, I think, a good harvest of the Rabi crop, with the government efforts to stimulate the rural economy and also improving liquidity, we are quite hopeful that starting in January, you will see an improvement in the rural categories.
So you said rural is slightly ahead of urban for you as of now. Can you give us growth numbers in that sense for urban and rural?
It's, just very marginally ahead, yeah.
So we saw you've been investing a lot towards innovation, and we've seen quite a bit go towards A&P, but that's come down a little bit. What is the reason behind that, and is that like calibrated and informed decision based on the kind of scenario that we're seeing in the economy?
No, it's more of a timing thing than more than anything else. The way we look at marketing investment is a mixture of advertising, consumer offers, and trade promotions. So if we add all of these 3 different buckets, in fact, the marketing spend went up. But what happened last quarter was that there was higher competitive intensity in the soaps category, which made us do more consumer offers, which reduced our ATL. Now going forward, because we have a series of new launches that are planned, you will definitely start seeing advertising go up as well from Q3 onwards. Some of the promotions will come down. But we remain very committed to investing very competitively behind our brands.
So how much would that be of your revenue in terms of percentage?
It's about 20 to 23%, yeah.
Okay. So as far as household insecticide is concerned, I want to understand the fact that there has been excessive rains. How has that impacted the category, and the fact that you've been talking about your innovations and the natural incense sticks? Have you been able to achieve the kind of market share that you sort of started out with?
Our market share story is quite strong. We're continuing to increase market share in this category. The category did see a bit of an uptick in the last quarter because of good monsoons. And I think even the winter monsoon is looking quite reasonable. So we are hoping that the momentum in insecticides continues. As you know, it's been a challenging category for us over the last few quarters, but we're definitely hopeful of a stronger recovery. And to aid the recovery, we have some major innovations planned. Our biggest innovation in the LV category, Goodnight Gold Flash, is being rolled out, and we believe that's going to be a very disruptive game changer.
Sure. So in the soaps category, you said that you've seen a lot of competition going up in the last quarter. We've also seen price actions by a lot of competitors. How has that worked out for you? Have you also taken price cuts in that direction, and what is the strategy going forward?
Our strategy in the soap category is to actually follow the industry in terms of any pricing actions. And so we've taken some calibrated cuts. Overall in the soap category, you've seen almost a 30% cut in price per gram over the last 12 months. So there has been a fair amount of intensity as far as price cuts or increased volume is concerned. So we are following the market. Beyond a point, I think further price cuts will be counterproductive, because more price cuts don't lead to people bathing more. So it doesn't necessarily lead to more consumption. So our focus will be far more on innovation, micro marketing, and actually expanding distribution. And where necessary, we will calibrate and follow competition as far as price cuts are concerned. So we're not planning on any further price cuts, but we'll have to wait and watch and see what the scenario with the competition is and take a call accordingly.
So, but any number that you can give us in terms of how much percentage the prices have gone down so far for your...
You know, it varies by region, by SKU and by brand, but the range of price cuts have been somewhere between 10 to 20% across various parts of the soaps portfolio. And for some of the other players, the price cuts have been higher than that. So we've been following a lot of the other players to see what they are doing. But as I mentioned to you, beyond a point, price cuts will actually get counterproductive and erode value. So our focus is far more on innovation and expanding distribution at this stage.
So what is your outlook for commodity prices? How are you seeing them?
We'll have to wait and watch. I think on the crude oil side, things seem to be relatively benign still. In terms of palm oil derivatives, which are used for soaps for us, we are seeing a certain amount of firming on the prices. We have fairly good covers over the next 3 or 4 months, so not too concerned about input prices over the next 3 months, but certainly post 3 months we'll have to see how the situation evolves.
So as far as your international business is concerned, good double-digit growth from Indonesia, but some pressure points as far as West Africa is concerned. If you could explain that to us.
Yeah, Indonesia has been a good, strong story, both on sustained double-digit top line and bottom line growth, and the team is quite confident to sustain that going forward over the next couple of quarters. In Africa, I think what's positive is that we are seeing good momentum as far as profit improvement is concerned. We are definitely seeing some stress in West Africa, in Nigeria, driven by an economic slowdown. The team is taking actions. I am very confident that you will see stronger top-line growth in Africa in the second half of the year, along with continued improvements in profitability. So we've taken lots of actions as far as innovations are concerned. The rest of the Africa portfolio, South Africa is doing well. Kenya has been recovering quite nicely. The rest of Africa is holding on. I think in Nigeria, corrective actions have been taken, and hopefully you will see stronger performance in Africa on top line and bottom line.
Sure. So any plans of inorganic growth, any opportunities that you're currently scouting for in whichever segments that seem attractive?
We continue scouting for acquisitions, no immediate plans as yet. The priority for any acquisitions would likely be more in India and perhaps in Indonesia, but these are more opportunistic at this stage. I think there is enough headroom for growth in our existing.
All right, that was the management of Godrej Consumer Products, Vivek Gambhir, outlining how the earnings were and also telling us what to expect going forward. They expect the ad spends to increase in Q3 onwards, and also will not see any more further price hikes. But talking about earnings, we have